Well, hello, everybody, and welcome to this introduction to credit spreads. My name is Jeremy Whaley from TradeMaestro.com. I hope you're doing fantastic today, and I'm looking forward to sharing this preview of the overall credit spreads trading course with you. So we've got a couple things to talk about, and I think you're really going to love this strategy. If you've never looked at it before, if you've never traded with it before, then it's going to be one that will absolutely maybe blow your mind, but certainly set you up for some successes that maybe you've been struggling with in the past. Now, before we get going here, I want to remind you that this trading is for educational purposes only, and all the examples or analysis are intended for these purposes and should not be considered specific trading or investment advice. All examples are for the purpose of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation before trading, and options, futures, forex are considered more sophisticated investment vehicles due to the high leverage and are not suitable for all investors. All right, consider yourselves disclaimed. If you need to read more of that, you can find it on our website over at TradeMaestro.com. Let's jump into our main presentation today. It's going to be about a 30-minute presentation. I want to give you a big old welcome. As I just alluded to, this presentation on credit spreads, I hope, is going to blow your mind. We're not going to go super in depth here, but I'm going to give you just enough to kind of know what's going on with the strategy and have a basic understanding of how the strategy is going to operate, okay? So let me ask you, are you sick and tired? If you're like most traders, you're sick and tired. Are you sick and tired of trades that start off in the right direction and then end up turning around and going against you? If that describes you, then I think you've come to the right place. Are you sick and tired of struggling to find trends in sideways markets? And that's something we've really struggled a lot with lately. Had a lot of sideways markets, and trends and finding good trends has been difficult. Are you struggling to find winning trades? Or maybe I should say you're struggling with winning trades, but you're not seeing your account go up. Are you sick of seeing that? I know how you feel. It can be very, very frustrating when you have a bunch of winning trades, but your account's not going up. Or are you sick and tired of no good way to recover if your trade goes bad? Yeah, so the trade starts to go bad and you're like, well, what do? I'm stuck. I'm just toast. And sometimes that's the case. Sometimes you're toast. But sometimes there's actually stuff you can do to fix it. So we'll talk about some of that today. And then, are you sick and tired of just wasting too much time watching the market and not spending enough time living your life? If this describes you in any way, shape, or form, then I might have the ideal strategy for you. I might. If you're looking for a strategy that will make money if the stock goes down, if the stock goes up, or even if it stays stuck going sideways. If you're looking for a strategy that has an 85% or better probability of winning, if you're looking for a strategy where you get paid up front before you even place the trade, if you're looking for a strategy where you have predictable profits and you can do all of that in less than 1 hour a week time commitment, then here's the deal. I promise I really might have the ideal strategy for you, because everything I just described to you are characteristics that we can attribute to the credit spread strategy. So here's what we're going to discuss in this little webinar or video. If you're watching this, depends on where you're watching this. So I don't know where you're watching this, but webinar, video, live stream, whatever it is. We're going to talk about what I consider maybe one of the greatest trading strategies in the world. And, maybe it's not the perfect strategy. There's no perfect strategy. I've been doing this for a long time. There's no strategy that's absolutely perfect, but this is a really darn close one. There's a lot of really cool features to this strategy. The second section of this webinar is going to be about what I refer to as just the basic construction of the credit spread. And then finally, what I refer to as the safety valve. So 3 main chunks of this webinar, kind of what is the greatest strategy in the world potentially. How do you even attribute that? How do you say this is the greatest strategy? Everybody's individual. Everybody's different, but it is a great strategy. We're going to talk about how you construct it and then what I call the safety valve and talk about what is next for you, okay? So, and then here's the cool thing. I have a little gift for you. If you stick around to the end, I have a special offer so that you can learn this strategy, all the ins and outs of it, basically for free. You're not going to want to miss that. So hang around to the end and I'll tell you how you can get access to all of it. All right, let's jump in here. And before we get into the depths of this, let me just kind of give you a little bit about my own history with credit spreads. I've been trading for a long time. I started trading in 1999. I was actually a senior in college when I started trading. It was actually between my junior and senior year. I started learning options fairly early on, but I took a big break, and it was really around 2004 that I started to really understand options and to dig into that and to start to learn that on a much deeper level. And I discovered credit spreads in my first options course that I took. And I fell in love immediately. Immediately, I saw the benefits of the strategy. Immediately, I thought, this is something I could really use, but I didn't use it a whole lot. I used it some. I kind of, I understood the strategy. I knew how to get in. I knew how to get out. But I had kind of gravitated to some other strategies until the financial crisis of 2008. And that's when this strategy really became something that I fell in love with because of all the volatility we had in 2008. And if you were trading at that time, then you probably remember that. If you weren't trading at the time, let me just tell you, in 2008, during that financial crisis, the volatility was off the chart. And we were able to write credit spreads and just make a ton of money. It was really awesome. And then that actually led to one of the things that I don't want to say it put me on the map for teaching necessarily, but it got a lot of traction, and I got a lot of people that started following me when I wrote this ebook called How to Retire in 1 Year with Only $10,000. I did that in 2009, following some of the success we'd had in 2008. And using this strategy, the credit spread strategy. And so early on in my teaching career, because that's about the time I started teaching as well, early on, the credit spread became a strategy that people used to come to me a lot for. And then over the years, it hasn't been as beneficial. It's still been good. I mean, it's never not been a good strategy. But once we got through that high volatility of 2008, 2009, it's been a little bit more stable volatility, and we haven't had the same kind of returns with it. And so what's happened is a lot of times we kind of gravitate to some other strategies. Sometimes they give a little bit better ROI. But it is my belief over the next several weeks, several months, I think we're entering to a season when these credit spreads are once again going to be potentially as profitable as they were in 2008 and 2009. We've had a few seasons of that. We had one in 2015 and 16. There was a few months in there. We actually had one in 2022 where we actually could really cash in a lot on credit spreads. And I think we've got another one that's coming up very, very close here. Maybe as soon as next week for all I know. But, I think that what I'm looking at economically on the horizon here, I think we're setting up for this, and it could last for many, many months. So I'm excited about it. And that's the big reason I bring this course to you right now. So you say, well, how profitable are you talking, Jeremy? Well, a typical credit spread in normal conditions is going to generally yield, depending on which one you write, is going to generally yield somewhere between 5 and 10% for about 2 to 3 weeks in the trade, 2 to 3 weeks to expiration. So if you think about that, most banks are like, hey, we're going to really reward you. Come to our bank. We'll pay you 4% a year. And they're all excited about that, right? Well, look, this is a strategy you can make 5% every 2 or 3, 4 weeks. How do you like that? And that's the boring side of it. In 2008 and 2009, we were writing credit spreads and we were bringing in 30%, 35, 40%, sometimes more on a 2 or 3 week credit spread. What we kind of designed as the ideal number is about 15 to 20%. 30% is great, but that's just not normal. You don't get that all the time. So what we try to do is somewhere in the 15 to 20% range. In the more recent years, when we've had much lower volatility, 10% has kind of been our threshold that we've been looking at. So I do think that in the relatively near future, we could get to the 2008, 2009 levels. I can't guarantee that, obviously. But regardless, it's still a great strategy. And if you've been struggling with some of the stuff we talked about a few minutes ago, if you've been struggling with some of that, this could be the perfect strategy for you. So let me introduce it to you. I call this maybe the greatest strategy in the world. The greatest strategy in the world. It reminds me of that movie Elf. Did you ever see that movie Elf? And he gets to New York. It was with, I'll think of the guy's name in a minute here. But it was, he gets to New York. He's an elf. He was a human that was raised as an elf. And he walks by this cafe that has a sign, world's greatest cup of coffee. And he goes in, he celebrates, like, it's congratulations, congratulations. And of course, it was a terrible cup of coffee, but they had just claimed it was the world's greatest cup of coffee. Will Ferrell, that was the actor, Will Ferrell. Anyway, that may be this strategy. Maybe it's not the greatest strategy in the world, but I claim it as the greatest strategy in the world. All right, first of all, let's talk about this. What is a credit spread? It is an advanced option strategy. Here, I'll take this full screen for you here. It is an advanced option strategy created by selling an option. It could be a call or a put, but it's going to be created by selling an option and then buying an option of the same type, either the call or the put, at a different strike price with the same expiration month. Now, if that sounds complicated, now you know exactly why I'm teaching a class on it, because It's not an out-of-the-box strategy that you can just open and say, let's run with it. It takes a little bit of understanding, but trust me, you can learn it. I've taught this to thousands of people. Probably taught this strategy to more people than any other strategy that I've taught. So let me put that into a little bit of a simpler definition for you here. In a nutshell, here's what a credit spread is. It is an option selling strategy. So if you're making some notes here, write that down. A credit spread is an option selling strategy. Okay, so we're going to make the money on the trade by selling options. That's an option short if you're not familiar with that. Okay. But then, because selling naked options has a lot of risk to it, well, it's a perceived risk, but it can have a lot of risk to it. And since people oftentimes don't want to take on the risk of a naked put or an uncovered call, what we want to do is we want to ensure that position, and that's where we create this spread. So we're basically going to do an option selling strategy like a naked put or a naked call, but then we're going to cover that strategy, cover that trade by buying a long option for safety. That's it. That's all a credit spread is, okay? Again, if that sounds complicated to you, I'm going to go through some examples here in just a minute, and hopefully it'll be a little bit simpler for you. And as you go through the course, it's going to be even more simple for you. Now, let's answer this question. What makes a credit spread potentially the greatest strategy in the world? Well, let me hit a few of the great benefits, and then we'll get into how we construct this strategy. Benefit number one of the credit spread. First and foremost, you can make money if the stock goes up, you can make money if the stock goes down, and you can make money if the stock goes sideways. Now, count that up. 1, 2, 3. How many directions can a stock move? A stock can move only 3 directions, up, down, and sideways. And here I'm suggesting to you that there is a strategy where you can make money if the stock goes up, you can make money if the stock goes down, and you can make money if the stock goes sideways. Does that sound like a strategy that maybe you should learn? And by the way, you can make, 5, 10% a month on that? That's pretty good. Yes, it is true. Potentially 3 out of 3 directions you can make money with the credit spread, okay? So that's the first big benefit. And frankly, that's the biggest reason that people gravitate to the credit spread, besides some of the risk management tools and some of the other things that go with it, but just the simple probabilities of winning and the directions with which it works. The second big benefit is what I just mentioned, probability of winning. It has an 85% or better probability of success for your trade. Okay, now, if you compare that to a typical long option, just buying a call or buying a put, or even just buying stock, your odds of success are around 30%. Statistically, it's 33%. So if you buy an option, you buy a long call option, you have a 33% chance that that stock is going to go in the direction that you want the trade to go, which in a case of a call option is up. Okay, so you're basically flipping those odds upside down and then adding a little bit to it. Pretty cool, right? So 85% probability of success. That's just with the strategy design. When I teach you some of the analysis that goes with it, we can take those probabilities of success even higher than that, like well into the 90s. There's nothing's 100%, but we can get really, really high, okay? So big benefit number 2 is 85% probability of success. The next big benefit, one of the reasons I think this could be the greatest strategy in the world, you get paid up front. How do you like that? How would you like it if you can go to work and you get paid before you've done the work? Or how about with your trade? How about if you can get paid before you've even completed the trade? You can do that with the credit spread. In fact, the very moment that you place the trade, you see the profit hit your trading account instantly. Well, pretty much instantly. So you're going to watch your account balance and you'll see your position balance go up by the amount of money that you sold your credit spread for. Hence the word credit. You're getting a credit and you're getting that up front. Okay, so that's a great reason that I think this could be the greatest strategy in the world. We don't have to wait to see it. We know what the money is going to be, know what the profit is going to be, and we get that up front. And that's the next big benefit is predictable profits. The credit spread, unlike a lot of strategies, especially with options, it's kind of hard to estimate what your profit's going to be sometimes. Not with the credit spread. With the credit spread, before you get into the trade and as you're executing the trade, you know exactly what your profit's going to be. You're executing it for that predetermined credit, for that predetermined profit, and you either get it or you don't. Okay, so it's a very straightforward, very black and white. You know what your profit's going to be on the trade. So that's big benefit number 4. Big benefit number 5, maybe my favorite of all. I mean, all that stuff's pretty cool, right? But this one's really cool. How about a low time commitment? You get all of those benefits we just talked about, but with a relatively low time commitment, you can literally execute all the credit spreads that you want to trade I mean, depends on how many you want to do, but let's say you want to do 4 or 5 a week. Okay, you can do all of that along with all of the relevant analysis that you need to do, and you can do that in less than an hour a week. What does that mean you get to do for the rest of your time? Well, you could go work your day job, or maybe you go spend the time on the golf course, or like I end up doing, spend a lot of time with my kids at the baseball park because my kids play baseball all the time. And it's strategies like this that make that possible. In fact, I'm going to let you in on a little secret. I don't tell a lot of people this. I've been doing this a long time. I've been trading since 1999. I already shared that with you. And I'm really good at what I do. And I'm really great at trade analysis, and I'm really good at trade strategy. But actually trading, where I sit in front of the computer and trade, I don't actually really enjoy that process a whole lot. In fact, if I do that and that's all I do for the day, in other words, if I'm a day trader, I'm miserable. I absolutely hate that, which is why I love strategies like credit spreads, because credit spreads don't lock me down to the computer. I'm a very free spirit. I like to be out doing things. I'm a very entrepreneurial person, so I have lots of different things going on, always have different projects going on. This is a strategy that allows me to make the money from the trade, but also live the life that I want to live. And if that sounds appealing to you, then it's one of the big benefits of this strategy. Low time commitment. All right, so all of those, there's 5 right there, 5 big benefits of why I think this could be the greatest strategy in the world. Let's talk a little bit about how we construct this trade. What did I just do? I think I just moved my slides all over the place, so forgive me for that. We will get this caught up. And there we go. How to construct a credit spread. Okay. So I've kind of shared with you an overview of giving you an introduction to credit spreads. I've told you the big benefits. At this point, you're probably like, yeah, sign me up. I want to learn how to write credit spreads. How do we construct a credit spread? What actually goes into this thing, and why do we call it a credit spread? Well, here's how it works, okay? A credit spread, there's 2 types, first of all. The 2 types of credit spreads, there's 2 types of options, calls and puts, and in the same way, there's 2 types of spreads, a bull put spread and a bear call spread. I actually said those backwards, but I wrote them backwards to what I said. I said them right. The slide was wrong. No. The bear call spread is going to be a bearish strategy using call options. The bull put spread is going to be a bullish strategy using put options. Okay, so you got calls and puts, your 2 basic options, calls and puts. And then what we're going to do with the strategy here is we're going to construct a call selling strategy, which is a bearish strategy, with 2 call options, or a put selling strategy, which is going to be bullish, with 2 put options, okay? So that is how we're going to construct it, and what I'm going to do now is I'm going to come over to a chart. I'm going to show you the basic structure here. We're not going to go into great detail. Don't worry. It's not going to get over your head too far. You're probably already swimming just a little bit, but that's okay. We haven't got into the good stuff yet. Can't do that in a little 20, 30-minute preview here. But let's say you're looking at SPY here. And so you're looking at this stock and you say, man, it's really stuck. I'd like to sell a call option. So let's say you want to sell a 420 call option. Now, this is a logical trade. If you know anything about selling options, if you wanted to sell a covered call, this would make sense. If you wanted to just sell an uncovered or naked call, this would make sense because the stock is stuck. It's been running into resistance. It hasn't really been going anywhere. It's been flat for, in this case, 8 or 9 weeks. Why not sell some options and bring in some option premium? Okay, that's the most logical trade that you can do here. In fact, it's such a logical trade that if this stock goes down, you're going to make all the money that you expected to make on that trade. If the stock goes sideways, if it just stays the same price, you're going to make all the money that you wanted to make on this trade. And in fact, this trade could go up all the way to your strike price, which in this case was $420 a share. It could go all the way to that strike price, and you still make all the profit you expected to make. So it can go down, it can go sideways, and it can even go up just a little bit. Perfect strategy, right? Almost perfect. Almost perfect. There's just one problem. Since right now, as we've constructed this would be a naked or an uncovered call. The danger is that the trade would go above that strike price of 420 and would potentially run really, really high. Now think about this. If you know anything about options, if you don't, you've come to the right place. But I'm going to assume you do. If you know anything about options, then you know when you sell a call option, you sell somebody else the right to buy the stock, you're obligated to sell it to them. So in this case, let's say the stock runs above 420, and let's say it goes to 425 or 430, 440, whatever. You're going to be obligated to sell it at 420. Well, if you don't have the stock, what do? you're suddenly in a short stock position that you didn't want to be in. You had to sell something you didn't have, so you're upside down. Okay? And how high can it go? The answer is as high as it wants to. There's no limit. Now, realistically, there's a limit. Well, there's not actually. There's not a physical limit to how high this stock could go. Practically speaking, it's probably not going to run up to $1,000. You know, that's a little extreme. But it could definitely go to, you know, 430, 440, 450. I mean, that's certainly within the realm of reason. And you don't want to be upside down in that trade. So what we're going to do here, watch this. I'll take this full screen so you can see it. What we're going to do is we're going to insure this position by buying a call. Now understand, the call, when we buy it, it gives us the right to buy the stock. When we sell the call, we're obligated to sell the stock at that price. When we buy the call, we have the right to buy the stock at that price. So if we sell at 420, we're obligated to sell at 420. Let me be clear on that. If we sell the 420 option, we're obligated to sell the stock at 420 if required. We may not be exercised on that, but we're obligated if we were exercised, okay? But by buying that 425 call, what we did is we insured ourselves, so now the stock can run up as far as it wants to, and we have a stopgap. We are insured at anything above 425. Okay, well, you can look at that, and even if you don't understand options very much, you can say, oh, that makes sense. I just limited my risk. I opened up potentially unlimited risk at 420, and by buying that call option at 425, I just limited my risk. The worst that could happen is $5 a share. Well, look, I don't want that to happen. You don't want it to happen, but you and I, either one, can sustain $5 a share loss. Whereas, you know, $30, $40, $50 a share loss, that's not something maybe that you want to sustain. Okay. So this is the benefit of the credit spread. This is it right here. I just constructed, this is a bear call spread. It is constructed with two call options. It is a bearish strategy. We want it to go down or stay the same price. It could come up just a little bit, but if it gets into our call that we short, the 420, then we're going to have that 425 there as an insurance to protect ourselves in case it runs really, really high and we don't want to be stuck. How's that sound? Pretty cool, right? All right, so let me tell you how the numbers work a little bit. And I'm not going to get into actual numbers because I don't, number one, want to get into doing math right now. And number two, it's going to muddy the waters. I just want you to understand this. When you sell the call, you're going to receive a premium. Let's say it's $5, okay? When you buy the call, you're going to pay for it. Let's say it's $4. Well, there's a difference there. Because the call that you're buying is higher, it's going to be cheaper than the call that you're selling. You will receive more money for the call that you sell than for the call that you buy. And that difference is your credit. That's the amount of profit that you're going to get on the trade. Hence, we call it a credit spread because you get paid that credit. It's the difference in the money that you sell and the money that you spend for the option that you buy. And by the way, if you're kind of tracking with the math here, let's say that you sell that call for $5 a share and you buy the other one for $4 a share. Yes, you bought that $4 a share option. You bought the insurance with money that you just made from selling the call. How cool is that? Okay. Now there will be a little bit of margin required, and we'll talk about that when we get into the details of the course. But just understand this. Look at this screen. I'll take it full screen for you again. Look at this screen. Stock goes down, you make the profit. Stock goes sideways, you make the profit. Stock can go up a little bit, you still make all the profit. If you get into trouble, you have an insurance policy, and there's a maximum loss on this trade. You can only lose, in this case, up to $5 a share. You receive more money for the call that you sell than you do for the one that you buy, and the difference is your credit. Are you sold yet? What do you think? This is a great strategy, okay? Now, this is a bearish strategy, the one I just shared with you, and that's why we call it a bear call spread, because it's a bearish bias using call options. What if we did this with puts? Can we do the same thing with puts? We certainly can. How many of you have ever sold a naked put, or you've been interested in selling naked puts? Okay, so if we sell a naked put, let's take the same trade here. Let's say you've been looking at SPY and you're like, man, this thing's been stuck forever. It's been just going nowhere for the last 8 or 9 weeks. I'm going to sell a $400 put and I'm going to get paid up front. Fantastic. Okay, I love selling naked puts. Like, naked puts have lots and lots of benefits in terms of the strategy repertoire. Okay. And the biggest benefit is if the stock goes up, you make all the money from your naked put. If the stock stays the same price, you make all the money. The stock can even come down a little bit, and it could come all the way down to your short strike price, which in this case is about $400 a share, and you're still going to make all the money. Now, this sounds like the perfect strategy, doesn't it? Because if stock goes up, you make money. Stock goes sideways, you make money. Stock can come down a little bit, and you still make money. It is a bullish bias, though. Why is it bullish? Because we're selling a naked put, and when we sell a put, that is a bullish strategy. To sell a naked put is bullish, okay? But there's one caveat to this trade. Just like with the bear call spread, you open yourself to a lot of risk. With the naked put, you open yourself up to some risk that maybe you don't want, which is the risk that the stock would go down, and it would go down substantially. And if you look at this trade, let's say I take this full screen again. If you look at this, if the stock comes down below $400 a share and it keeps going, let's say it goes to 385 or 380 or 370 or shoot, I mean, just look back at October, we're down here at 350. Okay, well, if we did that again, you're in trouble. I mean, you're going to be forced to buy the stock at 400 and it's only worth 350. Do you really want to do that? Probably not. So how could you insure yourself if the stock goes down? And the answer is, let's buy a put. What does a put do? It gives us the right to sell. Okay, so let's buy a put one strike price lower, like right around 395. And now we have the right to sell the stock at 395. So if we get put the stock at 400, on the outside chance that we get put the stock at 400, we have the right to sell it at 395. Now we have a hard stop. Now we have a hard backstop against which we cannot lose more than, in this case, $5 a share. Now, in both of these examples, I've used $5 a share. You can use a wider or a more narrow spread. This just happens to be the one that I chose for these two examples here, okay? But you could do a $1 spread. So you'd limit your risk to $1 per share. But understand the strategy here. We're selling the naked put. We are insuring it with a long put. The combination creates this vertical spread that we call a bull put spread. It's bullish bias using only put options. And once again, we're going to make more money from the put that we sell than the put that we buy. And the difference in those two premiums is your credit. Hence the name credit spread. Is this the greatest strategy in the world? It might be. I don't know. But it's a good one. I don't know if it's the greatest, but it's a darn good one. I sure like it. And I've been doing them for years. Okay. Love this strategy. Now, what if I told you that sometimes the best plans that you make go the wrong way? Thinking of an old poem. Never mind. I'm not going to get off on that tangent here. What if I told you sometimes the best plans you make often will go the wrong direction and totally mess you up? So what if we could turn this, even in the worst case scenario, into a winner? Would that be cool? Check this out. I call this the safety valve. Okay. Now, what is a safety valve? Understand that a safety valve is something you do in an emergency. It's not the plan, but it's the backup plan, or in some cases, it's the backup to the backup plan, okay? That's why I call this a safety valve. Imagine that things go terribly wrong with your trade. And, terribly wrong, what is that? You can only lose $5 a share in this trade. So on one contract, that's a maximum loss of $500. You can sustain that. It's not too bad. But what if things go wrong? Wouldn't it be nice to turn what could have been a really bad loss into a triumphant win? Wouldn't that be cool? With the credit spread, this is possible. You say, how could we do it? Well, let's go back to our example. Let's go to this bear call spread that we set up here. And as you take a look at it, understand that you are the holder of a short call. That's an option that you are obligated to deliver on. So the call option is the right to buy. You're obligated to sell, in this case at 420. You have the right to buy at 425 because you bought that long call on top of it. Well, what if the trade starts to go up, starts to get into your spread, and you're starting to go from pure profit into mounting losses, even though you do have a cap? What if we buy to close the short leg? You can do that, right? Anytime you're in a short option, you can always get out of it by buying to close. So what if we buy to close the short leg of the trade and we hold the long leg and make money as it goes higher? What? Could we do that? Yes, you can. First of all, let me break this down a little bit. Anytime you sell an option, you sell to open it. So you're in a short option, you can always close that trade pretty much instantaneously. Well, might take a minute or two, but you can close that trade very, very quickly just by simply buying it to close, whatever the price is. And that's going to cost you a little bit, okay? Because it's going to probably be more than you sold it for. Not always, but usually it'll be more than you sold it for. So you spend that money, you buy to close the option because the trade in this example would be going higher. You say, well, man, if the trade's going higher, I sure would like to have a bullish position for that. Wouldn't that be great? I already do. I already own a long call. That's a bullish trade, right? So watch this. Let's get rid of that short position. Did you see that? Did you see that nice little animation I did here? I'll do it again here. Okay. That popped up. Then watch this. We're going to get rid of the short leg. See, there it goes. Bye-bye. Isn't that fun? All right, we'll get rid of that. Now we no longer need this because that's no longer relevant. The stock is going higher and higher. You say, I sure wish I had a way to capitalize on it. Well, I can. I own a call option. And you say, well, how much could I make with a call option? Now it just turns into a regular long call play. So at some point it's dollar for dollar, but initially it's going to be whatever your delta is. So if your delta is 50, every dollar the stock goes up, you'll be making 50 cents. If your delta is 60, every dollar the stock goes up, you're making 60 cents. And eventually it'll get to dollar for dollar. Isn't that cool? Now you can see why I think this might be the greatest strategy ever. It makes money if it goes up. It makes money if it goes down. And it can make money if it just goes sideways. It has an 85% probability of success. You get paid up front. You have predictable profits. And as I just showed you, you have a safety valve if things go wrong. What more could you want from a trade? Well, maybe you could want to learn how to really do it inside and out. What's next is to take the complete course, the ultimate masterclass for learning to trade credit spreads. And that's why I'm excited to be sharing this with you, because I'm announcing that I am putting this out again. Now, I've been teaching this class in various capacities for, well, gosh, 13 years now. Hard to believe it's been that long. But I've updated this course, and it's all updated for all the current market conditions and everything. So it's everything that you need to start learning how to trade credit spreads for income and updated for current market conditions. I'm just calling it the credit spreads course. Yes, I don't have a more creative title for it. I could call it something really innovative, but I didn't. I called it the credit spreads course because that's what it is. Here's what you're going to get in this course. You're going to learn how credit spreads work. You're going to learn how to pick the candidates to trade. That's an area that people often struggle with. So we're going to talk a lot about that. We're going to talk about how to do the analysis for the credit spread so you know when to get into it, exactly which options to buy and exactly which options to sell, exactly how far to go out for your expiration, all those details. We're also going to talk about how you undo the trade, how you pull the safety valve if you need to pull the safety valve, or if you just want to get out of it completely. We'll talk about those details, literally everything that you need to not just get started trading credit spreads, but to really master trading credit spreads, okay? So this course, here's what you're going to get in it. You're going to get the complete credit spreads training course. It's about 5 hours of training. I will be teaching it live, depending on when you're watching this. It's coming up in May. So you may be watching this after the fact, and if that's the case, then great, because the next bullet point applies to you. You get all the recordings. Everybody gets all the recordings. But, the idea here, hopefully you're seeing this before we do it live, and you can join us for the live sessions. And if not, then, of course, you can watch all the recordings. Regardless, you have access to all the recordings. And then here's a couple of extra bonuses that I'm including that I don't normally do for a course like this, but I'm going to. Just for this one, a list of 25 of the top stocks that work really well with credit spreads. How cool is that? Okay, so yeah, I'm going to show you how the strategy works. I'm going to show you the ins and outs. I'm going to show you how to get into the trade, show you how to get out of the trade. It's going to take us about 4 or 5 hours of training to do that. Okay, you're going to have a recording so you can go back and watch all that. And I'm going to give you a list of 25 of the stocks that this works really, really well with so that you are all set up to go out and succeed. And then, maybe most important of all, I've put together a checklist. Some of you don't know this, but in my secret private life, I'm a private pilot. And what do we do as pilots? We also have a checklist for everything that's going on in the cockpit. Well, a few years ago, I started doing this for the trades as well. putting a checklist together. So I've put together a credit spreads trade execution checklist. Just do this, do this, do this. It goes through the analysis, it goes through the option selection, goes through everything that you need to execute the perfect credit spread. All included in the credit spreads course. So you have literally every reason you need to say yes. But if that wasn't enough, when you jump into this course here, which I'm going to share the next benefit here in just a moment in more detail, but when you do that, you also get twice a month live group coaching where you can come and literally ask any question you want. So you have access to me, and it's not like my assistant, it's like me. Because I show up first Wednesday and third Wednesday of every month, and you can ask any question you want. If it's regarding credit spreads, I'll be happy to answer those questions. If it's regarding something else, regarding options or other analysis things, then we can jump into that as well. But you have access to that in our monthly group coaching sessions. So literally, you have every reason to say yes. You don't have any reasons to not want to do this because, like I already said, it's like almost the greatest strategy in the world. So if you want to trade stock options, sorry, I get a little bit giddy about credit spreads. If you want to trade stock options, this is a great strategy for you. If you want to trade a strategy that wins when the market goes up, wins when the market goes down, wins when the market goes sideways, this is a great strategy for you. If you want to have more time to enjoy your life, more free time to enjoy your life, this is a great strategy for you. If you want to enjoy a strategy that has an 85% or better win probability, I promise you, folks, this training is designed exactly for you. It is perfect for you. So here's what you're going to get. As a reminder, you're going to get the complete credit spreads training course. You're going to get about 5 hours of training, somewhere between 4 and 5 hours. If you can do the live course, we're doing that in May. I would love to have you live because then you can get involved in all the interaction and stuff. If you're not, you still get the recordings of all the sessions. You get my top 25 credit spreads watch list that you can work with for trading credit spreads, as well as the trade execution checklist. It is everything you need. You say, well, how much is this going to set me back, Jeremy? Hey, I'm so glad you asked. Like I say, I've been teaching this course since 2009. So when I started teaching this course, it's gone through several iterations. This is the most current, modern version of it, the best version ever. But for all those years, I've always sold this course for $497. So that is the price of this course. And pretty much anytime you want to acquire this course, you can do it for $497. But right now, no, you don't have to do $497. Why? I told you at the beginning of this webinar, I told you that I had a special offer for you. What if I told you that you could get this course? You can get everything. Everything I just described to you. What if I could tell you could get all of that for free? Would you be interested in getting all of that for free? $497 course for free? Yeah, that's pretty cool. I mean, that's awesome, right? So how can I do that? Let me take this full screen because I don't want you to miss this. Here we go. You ready? The complete credit spreads course is included free with a Maestro membership. What? What is a Maestro membership? Maybe you know about it. Maybe you didn't know about it. But if you didn't know about it, let me tell you about the Trade Maestro membership. A Maestro membership is our monthly mentoring program where we do training, we do group coaching, and we teach you how to be a better trader. It's that simple. Okay. And this course, this credit spreads course, I'm including it with the membership. So when you enroll as a Trade Maestro member, you get this course. It's included. Isn't that awesome? So you say, well, what else is included? I'm so glad you asked, because right at the core of everything we do is our Sunday night class, Profit Picks. I do this every Sunday night. We do it at 8 o'clock Eastern time, pretty much every week. Sometimes there might be something where we can't do it live, but most of the time it's live. If we don't do it live, I do some sort of a recording and I get that out to you. Regardless, you get the recordings. So even if you can't make it live, you still get the recordings that night and you can watch it. We go through market analysis of what's going on in the market at the time. We go through trade ideas. We go through typically at least 10 trade setups for the week. We pull 5 from our top 10, and then we have a top 10 list that we look at. And so we pull 5 from that, and then we pull generally 5 from the rest of the market. Sometimes it's more. Every once in a while, it's less, just depending on market conditions. But for the most part, it's 10 trade ideas a week, complete market updates, complete market analysis of everything you can expect for the week. It's fantastic. This course, well, it's not a course, it's a live class. There's no curriculum. It's just an analysis and trade idea class. I've been doing this in some variations for about 14 years. I have people that take this class every week that have been doing it from the very beginning. That's the best testimony I got, right? I mean, I got people who've literally been doing this class in its various iterations for 14 years. Okay. So is it incredible? Look, some people don't like it, but most people love it. I mean, this is the anchor. This is what everybody comes to me for every week, the profit picks. Okay. So you get that with the Maestro membership. But in addition to that, you also get, oh, by the way, if you were to just buy that, it's $300 a month. Okay. But you don't have to do that because it's included with the Maestro membership. In addition to the profit picks, what else do you get? You get the group coaching that I told you about. So I told you just a minute ago, I told you that with the credit spreads class, you get twice a month group coaching. Well, this is where it shows up. It shows up in the Maestro membership because twice a month on the first and the third Wednesday of the month, we do a live group coaching. Okay. You can ask anything you want. It doesn't even have to be about credit spreads. It can be about options. It can be about option time decay. It can be about chart patterns or candlestick patterns or anything else you want to talk about. But we do on the first and the third Wednesday of the month. It's a group setting. It's very much like a private coaching session because we launch a Zoom meeting and you have access. You can turn your microphone on and you can talk to me. We have a bi-directional conversation. It's not like this. It's not like I'm just talking to you. It's we talk to each other. The only difference in group coaching and private coaching, really, there's a couple differences, I guess, but the major difference is there's people listening in. That's really it. But, if you're asking a question in group coaching, I treat it just like I do in my private coaching sessions. I give you the direct answer, tell you what I think about it, what my opinion is, tell you how I'm thinking about it. I will oftentimes interrogate you, not really interrogate you, but ask you questions and get you involved. And I just coach you through it. But we do it in a group setting so other people get to benefit from it. And then it's not just that other people get to benefit, but you get to benefit from those same interactions with other people. So it's a really useful environment. And I call it group coaching. And we do that on the first and the third Wednesdays. And, if you were to buy private coaching from me, I charge over $500 an hour for my private coaching. So, maybe group coaching is not quite as exclusive as private, but if you did that twice a month, we're talking, at least $850 a month. That's at least what it's worth. If you did it private, it'd be $1,000 a month or more for that. So certainly group coaching is at least $850 a month, but don't worry about it. That's all included in your Maestro membership. Okay. So two things, profit picks and group coaching. And then here's the third thing. And this is where the credit spreads comes in. The market mentor. These are on-demand courses. My idea when I created the Trade Maestro business is I wanted to create an environment where we could mentor traders like you to become great traders. And so we figured we'd do that through on-demand courses where we could offer all this mentoring. So it's specialized training. You're going to learn about analysis. You're going to learn about strategy. You're going to learn about risk management. We've got courses for all of that. Now, each of these courses, some of them are shorter than others. Some of them are 2 or 3 hours. Some of them are 8 or 10 hours, just all sorts of different time frames for these courses. But individually, most of these courses have sold for $9.97 or more. It's really hard to put an exact value on what this is worth, but approximately $9.97 a month. But listen, you don't have to worry about that because it's all included in the Maestro membership. So you get all of that with the membership. You get the profit picks where we come together every Sunday night, do a live analysis, do trade setups, trade ideas for the week. You get the market mentor, where you get new training sessions, new insights into strategies, into analysis techniques, risk management techniques, all sorts of training courses there. And then, of course, the group coaching where you can come in and ask anything. And you get all that for how much? Well, profit picks, $300 a month, market mentor, almost $1,000 a month, group coaching, $850 a month. So if you added all that up, I should have added it up, but I didn't. But, it's over $2,000 a month. But with the membership, with a monthly Maestro membership, it's only $97 a month. And guess what you get with that? With that, you get the credit spreads course because it's included in this membership. So here, that alone is worth $497. We know that, right? So you've been watching this webinar, learning about credit spreads. You're like, well, how can I get that? How can I learn about that? Well, you can get that for free with your membership. And if you decide, hey, you know what? I don't like this membership. I tried it for a month and I don't like it. No big deal. You can cancel anytime. There's no long-term commitment. If you decide you do want to commit long-term, there's also, you can save some money if you do a 6-month membership or 12-month membership. You can save a little bit of money on that. But you can just go month to month, and if you decide you don't want it, then you can cancel. So you say, is this worth it? Is it really worth it? Should I do a membership like this? Well, what if all you do is find a great trade every week? And look, I'm going to be candid with you. Not every week do we have great trades. I mean, we pull out good looking trades every week. Sometimes they work extraordinarily well. Sometimes they don't work as well. But it only takes one. Like one good trade a week. One good trade a month can pay for the entire year of Profit Picks. Like literally one good trade from Profit Picks will pay for the entire year of your membership. And that happens all the time. We have trades. I mean, if we went back over the last year's worth of trades, some of our trades have generated $80 to $100 per share of profit. One trade like that can pay for a decade of your membership, right? And then, most of our trades, all of our trades are going to fit our criteria. They're going to have a 2 or 3 to 1 reward to risk ratio. We end up with about a 70 to 80% win ratio on the trades. I can't tell you exactly what it is because it's always changing a little bit. Some weeks it'll be just a bunch of break evens, but you're going to get your value from it. Okay. So if all you get is one great trade a week, then you paid for the entire thing. What if all you get out of your membership is answers to those lagging trading questions that you haven't been able to get answered, or you've been wondering and been like, man, I wish I could ask questions to this. What if you can come to the group coaching and get all those questions answered? Would it be worth it for a mere $97 a month? Yeah, absolutely. What if all you get out of this is access to the training that you've been needing so you can be a great trader? So you can learn about chart patterns and candlestick patterns and all the indicators and all the other stuff that we teach in terms of analysis. What if that's all you get out of it? Is it worth it just for that? Absolutely. It's worth $97 a month for the training 10 times. Easy. Okay. Or maybe what if all you get out of this thing is the opportunity to participate in this upcoming credit spreads course? Is it worth it? The answer is absolutely. Of course it's worth it, and it's worth a whole lot more. So really, you have absolutely no reason to avoid enrolling right now. You absolutely should enroll right now. Why? Because it's just great. There's no reason that you shouldn't do it. So do it. Just go ahead and do it. Now, you might be wondering, can I really cancel anytime? The answer is absolutely. In fact, it's so easy to cancel. All you have to do is go into the membership area. Once you enroll, you'll get your own membership login. It'll be your email address. You set your own password, and then you can go into the membership area, and in the upper right corner, there is a button that says members, I think it says account, or maybe members home, something like that. But you click that, and there's a place in there where you can cancel. So you don't even have to talk to me. Okay. You can send me an email and you can tell me that you hate me and you don't want to be a member anymore, but you don't even have to do that. You can just do it on your own. So yes, you really can cancel anytime. You can turn it on and you can turn it off. Okay. So all of that, everything we just talked about for a mere $97 a month, it's a no-brainer. It's a no-brainer. Get yourself enrolled right now. You get immediate access to the membership. And depending on when you're watching this, we have this credit spreads course coming up here in about a week or so, or you may be watching this after we've done it. If we've already done it live, you'll know, because if we haven't done it, it's all over the website. If we have already done it, then it's in the members area, and you'll have access to credit spreads course, and you can go watch it anytime you want to. You have immediate access. Okay. So go ahead and get yourself enrolled. I want to thank you for watching this. It's been great to have you with me, and I look forward to seeing you in the course and in the membership. And when you do get yourself enrolled, make sure to mark off Sunday nights at 8 o'clock Eastern time. That's 7 o'clock if you're in the Central time zone, 6 o'clock in the mountains, 5 o'clock if you're on the West Coast. If you're in a different time zone than that, you have to do your own math, because I have no idea what time it is where you live. I don't know. But for those of you living in America, East Coast, it's 8 o'clock, 7 Central, 6 Mountain, 5 Pacific. Get yourself signed up and then mark it on your calendar and show up Sunday night. I look forward to seeing you, and let me know. Just say, hey, my name is Bob, or my name is Mary, whatever your name is, and say I'm new. And we'll give you a big Trade Maestro welcome. And welcome to the family. All right. Thanks a lot for watching this. I look forward to seeing you on the other side. And until then, happy trading. We'll talk to you soon.